Check, check. Mic check, mic check, check, check. 1, 2, 3. All right, here we go, here we go. Good evening, everybody. Hope everyone had a great day today. And yeah, just wasn't able to trade too much today, but I did get one trade in. And I think you can see it in the live stream. I tried to get the chart trader up and running. I just entered it. And yeah, so let's take a look and see what happened today. Let's do a look back and get a sense of what might happen tomorrow. So let's head over to the charts. So tomorrow, economic events. The only important one is at 10 o'clock a.m. There's this pre-UoM consumer sentiment. You will see some volatility, but you're not going to see like an insane amount typically. But it will probably provide enough for a 10 a.m. silver bullet trade, where you're looking for a fair value gap to form either before or up until that point. You're looking for something to trade to that. That's really it from an economic standpoint. If we take a look at the dollar index, remember this is supposedly trading opposite to how the index, how the indices trade. So there was quite a strange day today where and let me go down to an hourly. So where all this morning, we had the dollar trading up massively, and we did get a little bit of a sell-off, but we also got a retracement back up and above to take out buy stops before we dropped at the 30-year auction, bond auction at 1 o'clock. We'll talk through that in a moment when we go to the charts, but it was very interesting to see dollar have this really marked raise up. So I anticipate us, we kind of see that dollar, and let me go back to the daily. We can see that dollar went down to take out this sell stop here into this daily imbalance, and went a little bit deeper into this bullish order block, and then skyrocketed from there. So we do see that there's a weekly SIBI low and downswing constant encouragement, so the 50% mark between here and here. So kind of expected to see a little retracement right there, but it looks like we don't have we hadn't really had it wasn't a really big displacement there, so we don't count that as any form of displacement, as any market structure shift, right? So we see some of these. It's probably easier to show on a 1 hour time frame, but you know, we can kind of see where this hit a key monthly low, and then we have a high form there. We start to see character and displacement above there, right? And then price ends up almost coming back to this point. It actually comes back to that point right up there, and then another displacement. So these signatures at key points in time are what we look for. And you know, we have not seen a major sharp decline to indicate that we're going any lower. So if we go up to the monthly chart, so from a monthly chart, we can kind of see that we've continued to rise up. We've come down. This is a high, a low, kind of like a low, high, lower, low here, low, high, lower, low, higher, high, and then it's came down and into the midpoint of this daily breaker here, and so we've come upwards from there. So there's room to move upwards on dollar. There's definitely some room up here still, so I think we're gonna continue heading up there. What does that mean for indices? That means that we would expect indices to head downwards. Now, one thing I want to point out, and this is the daily. One thing I want to point out is that we've now reached into, there's this open daily sell side imbalance, buy side inefficiency within a premium here. This dotted line is the 50% mark. I actually should make this black line to stop confusing myself. So that's a 50% mark there, and I actually should change this as well. So I stopped changing. We're gonna make this black so we can see that. We can see that that was a downswing equilibrium. So we're very much in a premium right now on the daily, and we've hit a premium PD array up here, and we've immediately dropped from there at the 10-year auction today. So if we take a look at the, let's see, what day was this? So this was the beginning of the week, right? This is the low of the week. If we take a look at the low and the high of the week, typically I would look for Friday to retrace 20 to 30% of the weekly range. It's already done that. It's actually hit that level immediately, and it is there. So I would anticipate that Friday we trade within this daily candles range. So you'll want to note the open, high, low, close of that particular daily range. So let's go down. For tomorrow, that's what I anticipate. I don't think we're gonna get a massive expansion or anything like that. We might, depending on how price books. Actually, let's go down to the lower time frame, because then I can show you what I'm looking for tomorrow. Kirk Townsend, all good. Hey, bro. All good here. How about you? Thanks for joining. So today's price action on the hourly chart, that was kind of key because there were two major areas of liquidity that kind of got reached into, and we could serve as targets. So today, Asia crawled up, left these nice, big, juicy fair value gaps. Now, if somebody were bullish, they would want price to come back down to these. I have not been bullish. I have been macro bearish. Not saying that I would short any of these, but if I am going to look for shorting opportunities, it would be around where we've reached now in this premium area. So price books in London, we start to see a little drop at the beginning of New York, and drops into this fair value gap. So there's one final push, and you can see that price didn't quite make it up to this premium higher time frame, meaning daily, weekly, monthly PD array. So I expected that to move into that at some point this week. Could be tomorrow, but it happened to be today. So this goes into there. It goes up once, twice, 3 times. So taking out early shorts each and every time before it really tanked. So this 3 drives pattern, and let me go to a lower time frame to let me see if there's anything that I need to highlight here. Nothing I can't highlight that's not on the 15-minute, but one thing to note is I had these hourly fair value gaps, I had them marked on my charts so that when I go down to a 15-minute, I can actually see them here. It's not too disruptive. So let's take a look at today's price action only, and maybe yesterday's as well, because we need those points of reference. So this is today's price action. This is Asia, this is London, this is New York. We can see on the 15-minute time frame, we formed these relative equal highs, and further back, if I can, let me make this solid here. Further back over a long time back, we had not only this area of liquidity, but also this one here, and also this one here. So you have a lot of confluences, lots of buy stops that you see here, and then what was one more right there. So kind of crazy, right? So let's zoom in on those 4 areas. So those you always want to mark if there are buy side liquidity areas that can be taken. You can kind of see how amazingly accurate these are. So first you see this first buy side liquidity taken in London and it drops. And you see it create a couple of what they call this relative equal highs here. And you see it that New York's first run takes it out. Now, this morning was very, very choppy in the 10 a.m. time frame. It was really hard. If you traded during this, you probably got chopped out. But it did come down into an hourly array, and it actually came down into 2. Let me see if it actually got all the way down there. So not quite all the way down there, but for the 15-minute time frame, we ended up getting down into this fair value gap, which is right around this previous high. So low, high, lower, low. This is a breaker, heads up. So it's natural to see that it comes down and people start taking positions back up because the algorithm wants to go for this higher time frame PD array. What happens when it hits that array? Immediately it drops. Here takes buy stops, immediately drops. Here takes buy stops once more, immediately drops, and that coincides with the 1 p.m. bond auction. So if you don't know what I'm talking about is, if we talk about this 1 p.m. 30-year bond auction, there was a large sell-off today because of that. So that, and you combine this kind of 3 drives pattern. When you see this pattern here, this is one of the ones that ICT points out quite a bit, and I was always confused as to how he knew which ones to short, because you might look back and you might see, other 3 drives patterns here and there, but the ones that really stand out are the ones that are nailing higher time frame PD arrays and then dropping from there. I've learned to look at those and keep an eye out for those because they're quite powerful. And if they happen at premium areas, you start to stack confluences that you can take something short. So at that point, price heads downwards. What does it aim for? First, these lows, and then it heads down towards external liquidity, which is down here, ultimately taking a bite into this bullish order block, this bullish order block. And this is also a low, high, lower, low displacement upwards breaker. So it hasn't formed a long-term, it hasn't formed an immediately short-term lower low here, but it did kind of take these stops right there and has continued upwards. So we will see what happens. I mean, if we see a lot of war type things tomorrow, we could see some pretty volatile action, but let's see what happens. The news will drive a lot of things like manual intervention. So I mean, we've gone up a lot this week. I mean, look at where we started. So we started down here at 15,150, and there's 200. We're at 200 points above that. So tomorrow I'll see if this shift in market structure here, because this is a pretty big one there, low, high, high, low, higher, high, and then a shift to the downside. So what did I point out during the stream today? The low here, 15,361.50. I'm guessing it hits this in Asia or London, but I would like to see this go up into this bearish order block and then reject from there and create a lower low. How low can it go? Well, it can go here. This is where within that weekly volume imbalance, there's relative equal lows here. You could go down into this area here where it's got a liquidity void where no trading has occurred and only upside. It can go down to there. Remember, and this is where you need to take a look at a little bit higher amount of time. You also see this buy side imbalance and this trade up through it here. It's actually something that you don't see unless you look at a real-time hour chart. So I'm going to bring this over here. So on the real-time hour chart, this means that they're from 4 o'clock p.m. till 9:30 in the morning the next morning. This shows us the kind of gaps that the market is looking for. So further down, we see that there is a initial liquidity void here. We have buy side action, liquidity void, buy side action, and that kind of like also resonates here as well. Buy side action, and no action, and then buy side action. So I would like to see price start to head down and take out and balance out these forms of liquidity down here. These here, you can see all of those that were created there. That this is the lowest one that I might consider aiming for. I don't know if it's gonna hit that on a, that would be a huge drop, but that's what I would be aiming for this week and maybe next week as well. Considering that we now have a shifted market structure here, and I do think that we can retrace a little bit, maybe hit this this point here on the, let me go back to electronic trading hours. So that low there, 15,361.50, I would like for us to see price to trade back up into there and then head downwards. However, I do see on the hourly, we've now had price go all the way up, and price rebalance all the way down. And I'm seeing evidence that it's kind of repelling off of this inversion fair value gap. So keep in mind, we're in a very large hourly fair value gap based on the bond structure selling. So if I look down at the 15-minute from here, we can kind of see that we've got, and let's put a fib from here to here. So the midpoint of that was just above this, just above that, right? You see that 50% mark there? So it's just about here, and there's this giant fair value gap here on the 15-minute. So let's drop down to the 5, see if there's anything that we can see. Now, if I was trading Asia, this is what I would be looking for, right? I would be looking for where the high, low of the recent swing. So this is our equilibrium point. There's an inversion fair value gap here that we see. There is optimal trade entry line lined up with this bearish breaker, and actually it could trade all the way up to there too, and that would cover the weekly imbalance there. And we still do have this premium daily Sibi low, so I'm watching that. I don't think we're gonna get all the way back up there, but hey, who knows, right? Markets have gone higher longer than we thought before. But in this case, since we have traded lower, I think this is the market keying in us to say, hey, it's time to go lower. So let's see what happens. I think the easier liquidity to take is on the downside. If I take a look at the, let's go to the weekly actually. So, and I haven't forgotten, for those who have requested me to do a chart from nothing, like kind of like chart from a blank slate. I have not forgotten that. I have a couple of things on my plate that videos that I have to chart, or I have to do, and that is one of them. And I promise I'll do that. Maybe I'll do that on the regular NASDAQ chart, since I haven't charted that in a while. Or maybe I'll do that on E-mini too, since I haven't charted that in a while. But these are the weekly chart. Okay, so these are the weekly candles that we see. Now remember, we're in a huge premium here. We're in a very big premium. Not only from a micro perspective, but on the macro scale, we're in a premium again. So we're going to need to see some interesting things happen if we're going to see a massive bull market come. But is it possible? Absolutely. And most retail is thinking, hey, this is an obvious bull flag, right? Well, obvious bull flags get smoked at some point, especially if they're in a premium here. So let's take a look at these a little closer. You can see a lot of weekly. Mind you, the weekly levels are my yellow ones, the yellow lines here. But you can see a lot of weekly. All of that is weekly imbalance that we could trade to. And actually, this entire upswing from back in April, that midpoint is down here. So I fully expect for us, if we do see this the bearish market like I expect, I do see us going down to that market at some point. But let's see how it trades first. If we break through here and break up, then I'll change my, if I see a major change in structure, then I will, shift my eyes and look for plays on that side too. Just the macroeconomic environment doesn't seem to support that right now, but we never know. So I think that's it though. So again, you see this week has already retraced. The TGIF trade is not in motion until we see it trade, unless we see it trade back up. We see this week trade back up to this and we take this out, maybe the midpoint of this daily imbalance, then we can expect a 20%, 30% reduction in price at the end of the day on Friday. But I'm not holding my breath for that. I will end up seeing what happens through Asia and London. If there's a trade to take and I'm free, then I'll take it. I think that some folks, you were here today. Let me see if I can set executions. Let's see if this will show it. Okay, it does show it. Okay, good. So you can see I got stopped out of a couple way too early. But this was the whole, if you remember, the bond market started selling off right around here. I was in meetings, so I couldn't take anything. But you can take a look at some of these trades that I took today. I noted that we were heading down below, and this is where I'm going to talk through some of the market psychology of why I took this trade. So I got out of a meeting, half-hour meeting here, got a chance to take a break, look for some lunch, and I noticed that we started to trade through and trade to and through that hourly fair value gap. If you remember, we marked that on a higher time frame. I knew that there was this area of liquidity and even this buy side liquidity that I could aim for. So I ended up taking that trade once I saw it reject here. I tried to take a market trade here, but it dropped too quickly. So I had to undergo a little bit of drawdown here, and I moved my stop like a little bitch, and I moved it down here, and I got stopped out. Same here, and then re-entered here, and had a little bit of drawdown there. I think I was trying to enter as it came back up into this bearish order block, but I wasn't quick enough with that market order. So it looks like we end up going back up into this order block. We see it immediately reject right here. That's what gave me an idea that, hey, this might go. So also going into this, this 2 o'clock silver bullet area, I noted that, hey, this is looking like it's going to run, and I think it's going to at least run to here. So I took it all the way down here. That's about 40 points. And that was the only trade, really big trade today. I didn't have time. I mean, when you're working a 9 to 5 job, you have to take meetings. The client has to come first if that is your job, because you need to make sure you're still doing right by your clients, right? I'm lucky that on some days that I stay back, if my team's taking a break or there's a little lunch break, then I can choose to do with that time what I want. But for those who are working 9 to 5, this is going to be really hard for you. It was really hard for me. I mean, this whole past year that I've been learning and studying ICT concepts a lot. So this whole past year, just every single day, hours after hours, and even today, I'm gonna go study some theory and commit that to my memory. There's some concepts that I want to learn still, so I'm gonna go look at those. If you haven't, if you've been to the channel, you know that I've studied ICT concepts. One of my mentor's friends, and actually a mentor, Sneaker, ended up sending me over to ICT, and all of that's self-study. Everything you need to know about markets, market making, it's all there. So highly recommend it. If I will try to dial some down maybe in the future. I know it's a lot of material, so that is in the books. It's just too much to do right now. I don't feel qualified to teach anybody yet. I can definitely show what I'm seeing because I've been around a lot of price action now, and I've been fortunate enough to be disciplined now to take good plays when they show up, and when there's a draw, when there's an accurate draw on liquidity. So yeah, I think that's it. I'm gonna close this so there's no more. That's extra data. This will slow your computer down if you have a potato for a computer. But yeah, I think outside of that, we're gonna move this back to a daily, and then we're gonna move this over the screen. Let me check and see if there's any other questions. Nope. Kirk, hopefully you've been good. Don't know if you're still here. So yeah, I mean, tomorrow we're gonna see if we come up a little bit into this area here and reject from there, or if we maintain the macro bullish flow and come up, take out a little bit more of that premium there, maybe the midpoint of that. That'd be nice for sure, and that'd be a nice nightcap, because then you can take that there's a concept, of here, let me go to the weekly, because then you can see the candle here. So I'm gonna go, let me do one thing as well. Let me take off all the drawings so you can see a little bit more. Okay, so this is a weekly chart, right? So on Fridays, and you can go back and back test this as well. On Fridays, most Fridays, not all of them, but most, you can go back and test this out yourself. But if you take the low and hit the range high, now remember, on our daily chart, we had this high was at a daily imbalance. You'll tend to see that price retraces 20 to 30% every single Friday of every single week, right? If you don't believe me, let me give you a few options. Let me give you a few examples. So let's take a look at last week. Low, high. It retraced less than that, so this was a fairly bullish week. I'm gonna skip this week because we can see this was I guess I'll do it. So this retraced much more than 20 or 30% from the high, right? So your weekly expansion has an open, your any given week, any given day, any given month has a open, high, low, and a close. So in the case of these larger moves, you typically won't see a massive retracement. So that is the only time where you might not see a full 20% retracement, is if it's like an insanely fast move like this week. But let's take this week here. Okay. So this one did not retrace to a full 20%. This one retraced a little bit over 20 to 30%. This week retraced just over 20%. This week definitely retraced a lot more than 20-30%, but here, this retraced a lot that week. So, you know, backtest that, you can kind of see that there is some, that's one model that there's people that trade just that model and they make bank off of just that model if they can only trade Fridays. You want to learn a whole bunch of different models so that you at least have 1 or 2 core models that you can look for, so you can find the plays that you want to play. I derive all my models. I've studied ICT a lot, so I have a handful of other models, right? But you only need a few. Like the 2022 model, excellent model. Tough to look for. You're going to be confused at first, but it's a little bit easier than most. So yeah, I think that's it. We'll look to see if it goes higher first tomorrow before we end the week. But given that candle, that reject off of that daily level there, I don't know if it's going to make it up there, but I would be curious to see. I see these highs. So on the daily candles, you kind of see like these highs are pretty close together. I wouldn't put it past price coming back up to around that point and then rejecting. I could certainly see that happening. So let's see what price does. Every single candle has an open, high, low, close. So we'll see what happens at the end of the day, at the end of the week, and then we'll see what happens if we get that nice curvature back downwards like I expect we will. So again, I want to say thank you so much for watching. Hopefully if there's any questions, drop them down in the comments. I will try to respond to any of them that I can. You can find me on Twitter as well. Same name, Johnny Lee Lin. And yeah, I mean, let me know if there's any questions, if there's anything that you see, anything that you've got questions about. Yep. Thank you. Appreciate you, Kirk. And appreciate all the subscribers that have constantly been like increasing. I think there's 165 now. It's ridiculous. I would never have thought that starting from like 20, and I think one of them is myself on my other main YouTube account. I would never have expected this to really jive with people, but I know it was a hard year for me just studying. So hopefully I can help give some of that insight out. So thank you very much. Have a great evening. Get some rest. And remember, tomorrow there's really just one economic event at 10 o'clock in the morning, preliminary UoM consumer sentiment. You don't need to pay attention to what that is. You just need to know at 10 a.m. there's going to be volatility. Nobody cares about what the numbers are. You just have to know what you're looking for there. So with that, I'm going to say good night. We will catch up some more tomorrow. Hopefully I can catch up with a trade or two with y'all. And yeah, hopefully I can trade with you all tomorrow, and we'll catch up soon. Some lessons coming up soon. I do plan on recording a charting from blank higher time frame to lower time frame. I do plan on also, there's a lady who requested risk management. I had teased a risk management, kind of a risk management tool that I use to calculate what I'm going to use and how I think about risk. Once I get to the performance accounts, I'm going to create a lesson on how you can create that yourselves. I'll make it available for people to take a look at and create your own, because everyone's risk management parameters are a little bit different. I'll run through how to, that's the second lesson that I'll run through. I just realized I wasn't sharing my screen, was I? I will run through this and give you a sense of like, hey, how can you tailor it to your trading style and your risk parameters. I'll create a lesson for that. That's something online as well. I those are the two immediate ones that I want to get done so that I can set those out for you. This next week is going to be kind of tough because I have a go live. So it'll be a little bit less available, but I'll still try and get a video or two out. So have a good night, everybody, though. We're going to wrap up here, and we'll catch up tomorrow. Have a safe trading day tomorrow, and good night.